that. What's happening, crypto crew? Sean's coming back at you, another cryptocurrency video. We're getting straight into it, taking a look at the Bitcoin price chart. We drew this chart out, we drew these channels. It seems like Bitcoin respects these channels as support and resistance since its entire life cycle. So what are we looking at? We're looking at the 2012-2013 blow off top. We're looking at how this got above this channel here and then sort of came back to retest it, didn't get enough momentum to keep a continuation, went to the bear cycle. 2017, ran up and hit this high again. This channel respected it and then had a close above it, came right back down below it, retested it, and flipped down to support. Now, look what happened. We went to a lower channel in the bear cycle. This is interesting. So if you see here in this bear cycle, we stayed on this level here. But in this next one, we came to this lower level. Now, what does this mean? Does this mean that we're going to come up and hit our head to this lower channel in 2025? You see, that would be a 300,000 plus Bitcoin price. So not that bad as far as a return. Or are we going to blast all the way up to $1 million, $2 million? When the ETFs pass, is the big wall of money going to make this blast up to retest this level once again? Into 2025, you see this price goes into the seven figures. Are we going to see that? Or are we going to see 100, 200, 300,000? That's probably more realistic, but all in all, you have to look at these channels and see what happens. Now, note here in 2021 that we didn't make it up to this channel. Looks like we fell a little bit short. And then we fell down and then sort of had a second rally, but it was like a double top pattern and we came down and put in this bottom. So why did this happen? Why did we not make it back up to this channel? Well, look at the time frame. We're looking at between April and May of 2021. Crypto crash wiped out 1 trillion this week. This is what happened. On May 12th, Bitcoin fell 12% after our boy Elon Musk, walked back Tesla's commitment to accept Bitcoin as payment, citing concerns over the cryptocurrency's massive carbon footprint. So this is why this happened right here. Elon Musk could have been the reason why we didn't reach $100,000 that year. That could have been the reason, because it shocked the market. Because you see, it shocked it, but then we still had some continuation. We even put up a higher high. And looking here, this is what Elon said. The Whale Wire says Bitcoiners are going to slap themselves next quarter when they find out Tesla dumped the rest of their Bitcoin holdings. With the amount of hate Elon's going to get, I wouldn't blame him. And then he responded to this saying, indeed, look at the date. This is why this fell off a cliff. This shocked the system. This shows you how early we still are if one tweet can shock the system like that. But then we had a continuation, and then we didn't even make it back up. So if we had this continuation up here, we would have broke 100,000 without that tweet. Potentially. This is all sort of a speculative theory, right? But it makes sense. But why did we fall off here? Like why didn't we just run up to the top here? Why didn't that happen? Well, there's a reason. Federal Reserve signals a shift away from pandemic support. The Fed said that it can soon slow its large-scale purchases of government-backed bonds and indicated it might raise interest rates in 2022. And if we look at here, this is a New York Times article published in late September, got updated in November. Looking back at these charts, this is November timeframe, Q4 timeframe, we fell off a cliff. And then what happened? The Fed raised interest rates all 2022. And the market just crapped the bed. So you have to look and see what's going on. So did we really get to how high we should have gotten without market manipulation? Now, when the ETFs pass and the green lights are given, can we blast through this and then come up to even higher price targets? That's what's in the cards for Bitcoin and crypto. You don't want to be sitting on the sidelines. You want to have your bags packed, because either way you look, price is eventually going to continue to rise and go to the moon. A few updates. You see that Bitcoin is forming this cup and handle pattern. This is a bullish pattern with a target up to about 47,000. We've showed you this in previous videos. Crypto Rover agrees. Look at these pi cycle top indications from Titans of Crypto. Between the bearish crosses occurrence, the Bitcoin touching the green line for the first time, it took 664 days during cycle 2 and 343 days during the third cycle. So right now we're currently 748 days. So what he's saying is once this line crossed and we came up and retested it, it took 664, line cross, retested, 341, line cross. We haven't retested it yet, but current day we're about 750 days in. So as you see, these cycles seem to be lengthening, but the longer it takes to recover, once that blast off happens, it could be a longer ride to the upside. Keep that in mind. Right here, Stock Money Lizards is also showing a 2023 to 2027 outlook. You see the 2017 peak, 2021 peak. He's just extrapolating these lines and calling for a 2025, 2026 peak. And this will take us up to roughly probably around that close to $200,000 to $250,000 threshold. But then he's saying the bottom could be around 80, 90,000. So will sub $50,000 Bitcoin be behind us? Will we not see these lows ever again? That's definitely a possibility. Without further ado, let's hear from Arthur Hayes. If you don't know who it is, he's the co-founder of BitMEX. He is a huge figure in the crypto space, but he's giving you his take on the markets and how the psychology of what the government does to its citizens, its lower class citizens, inflation, and how it affects the psyche of how you should get into the market. Let's hear what Arthur has to say.
There's a lot of inertia, right? With people in money, they understand how this monetary system works. Bitcoin didn't exist 20 years ago. You're really going to take your hard-earned money and you're going to put it in magic internet money with a bunch of people with like pudgy penguins and crypto punks as like avatars who are like debating macroeconomic policy on Twitter and other social media platforms. And so like, why would I trust this financial system versus the man or the woman in a navy suit with an Hermes tie and a pair of Louboutins on, right? And so it's all these things that factor into whether or not you trust the financial system or not. Again, very personal, but the unfortunate part is that most people aren't taught the math. They don't understand how a bond works. They don't understand how a bank creates and removes credit from the system. They understand why mathematically this cannot continue the way it's going, and that there will be a reckoning. And history has told us the exact playbook they're going to use. It's not as if they're hiding it from us. There's paper upon paper written about exactly how to financially repress a population, to make sure money doesn't leave the banking system, to use the banking system to purchase the government debt at a level the government can afford that is below the level of growth in the economy, such that the government profits. This has all been written about. You can read it on the internet, but most people are too lazy or too distracted, or they work a job and they're just too tired to open up a book and read. But it's all there for you to read. And if you read it all, you'll understand very quickly that the situation cannot continue and you have to do something. And that something depends on your financial position. Obviously, I'm in the position to put a lot more of my wealth into crypto and not care so much where the price goes. Maybe you're not. The most insidious part of inflation is that the poorer you are, the more percentage of your income is spent on energy. Therefore, the more inclined you are to become a degenerate speculator, because the little bit of money you're able to save, you need to lever up so much just to make an impact on the depreciation of your wages versus the cost of food and fuel, that you make bad choices, especially if you're not educated about what these financial markets are. Because that's been essentially government policy globally, is to keep people in the dark about how money works so they just blindly trust the supposed person in power.